10 years ago, this company was trading at rupees 4.5. Fast forward today, 10 years later, the share price is rupees 589. That's a growth of 130 times in 10 years. It means 1 lakh invested 10 years ago would have become 1.3 crore. Since the topic is on fundamental analysis of Kaplan Point, I am sure that by now you would have guessed that I am talking about Kaplan Point. Now, how many companies do you know with such mind-blowing wealth creation for its shareholder? In fact, Kaplan Point claims to be the second biggest wealth creator for its shareholder in the decade ending 2020. Now the question is, Kaplan Point is already a multi-bagger with 130 times growth in just 10 years. So why am I even talking about it? I should talk about companies with potential to become multi-bagger in the future, isn't it? Well, in spite of that humongous wealth creation, Kaplan Point is just rupees 4,400 crore company. So it is a small cap company. That creates an opportunity for this company to grow even more and become a mid cap or a large cap company. Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. We will first start with understanding more about the company and its product offering, its management, competitive strength, competitors, risk, and future growth prospect. And then we will discuss the financials to understand if Kaplan Point is fundamentally strong company or not. Finally, we will do the valuation analysis of Kaplan Point and then conclude if it is worth investing in Kaplan Point at current levels or not. And this video is only for educational purpose. Please do your own research before investing your money. And if you want to learn how to identify quality stock and every concept of money management, you can explore my course. Alright, let's get started. Kaplan Point was established in 1990 to manufacture a range of ointment, creams and other external applications. The company was listed in 1994 and set up a manufacturing facility at Pondicherry. Thereafter, the company expanded its product range and increased its production capacity. Company focused on the emerging market of Latin America, Caribbean and Southern Africa, and is today one of the leading suppliers of pharmaceutical in these regions, with over 2,800 product licenses across the globe. Kaplan Point also entered regulated markets such as US through its subsidiary Kaplan Sterile Limited. Kaplan Point has been selected as Forbes Asia's 200 Best Under a Billion list for 3 consecutive years in 2014, 15 and 16. And was awarded the Emerging Company of 2018 by Economic Times Family Business Awards. Now let us look at the journey of Kaplan Point. Since the incorporation, Kaplan Point was a contract manufacturer for almost 20 to 25 years, where it would manufacture generic products for pharma companies. It used to operate in Latin America and Africa. But then, company started to transform into a pharma company. It started offering both generic and branded generics and specialty molecules and injectables. In 2014, it started its injectable unit. In 2017, its liquid injectable facility gets US FDA approval. In 2018, it started its commercial shipment to US. Kaplan Point has 4,000 plus products, 650 pharmaceutical formulation and 36 therapeutic section. Its product mix covers a significant number of drugs classified as essential by WHO. Look at the way its product mix is changing. Earlier in 2012, 95% revenue was from generics and only 5% from branded generics. But today, 25% revenue is from branded generics. Due to that, this profitability has also increased significantly. If you look at the products of Kaplan Point, it includes your tablets, capsule, injections, ophthalmic, liquid orals, ointment, creams, gels, powder for injection and many more products. For example, the products include Ibuprofen 400, which is a combination of ibuprofen and paracetamol. Then it has Gencloben, which is used for skin infection and many more products. If you look at the revenue breakup, Kaplan Point generated a revenue of rupees 1,085 crore in FY21, and out of this, 75% is from generic and 25% is from branded generic. In terms of channel, distributors contribute the most with 60% revenue of the company. In terms of geography, for generics and branded generics, Latin America and Africa is the biggest market. For injectable and ophthalmic, India contributes 60% in export and US contributes 8% in revenue. Latin America contributes the most with 87% revenue. If you look at the leadership, Mr. C.C. Parthipan is the chairman of the company and he has 30 plus years of experience in pharma industry. He is the first generation entrepreneur with focus on the bottom of pyramid with good quality and affordable products. And he is the man behind the company's phenomenal growth since its IPO in 1994. Overall, on company, its product portfolio and leadership, I would rate it 10 on 10. If you look at the competitive strength of the company, its first strength is data-driven company. So Caplin has invested in digitization to generate rich retail insight across consumer, market, etc. in Latin America. This data-driven approach has generated a lot of insight which helped in making data-driven decisions. Its second strength is focus. Company has a clear focus to be the best in their work rather than being the largest. Due to this, in spite of being a small pharma company, Caplin has managed to enter into the US market. Its third strength is extensive portfolio. Company has a wide range of product portfolio comprising of tablets, capsules, injections, ointment, etc. catering to treatment of a wide range of diseases. Its fourth strength is strong financials. Caplin Point has a very strong balance sheet with high profitability and good amount of free cash flow to drive the next phase of growth. Now, if you look at the key risk, one big risk is geographical risk. Caplin Point has higher exposure in Latin America and this creates a geographical risk. To reduce this risk, company has entered into US and planning to enter into various other geographies. Next risk is regulation risk. Pharma sector is highly regulated, especially in America. So that creates a risk in terms of rejection of drugs that could impact the profitability. If we discuss the competitors, since the company operates in various parts of the world, it doesn't have a specific competitor. Every geography has a separate set of competitors. Moreover, we can't compare it with the companies like Divis Lab or Sun Pharma, as Caplin Point has a different set of product portfolio and it's not the direct competitors to these pharma giants. And I could not find more information about the direct competitors of Caplin Point. Let's first look at the demand side drivers. In demand side, there is increase in fatal diseases, growing number of lifestyle related diseases and increasing penetration of health insurance and better diagnostic facilities. These factors would create more demand for pharma sector. Now, if you look at the supply side drivers, India has cost advantage due to low cost labor. India is already a major manufacturing hub for pharma industry and has the skilled workforce to cater to the growing demand. On top of that, the outbreak of COVID-19 is expected to drive the healthcare segment exponentially due to the increasing research work being undertaken to control the pandemic. Caplin Point is on a rapid growth phase with capital expenditure in the tune of rupees 250 to 300 crore to widen its product portfolio and backward integrate majority of its product. Company is setting up manufacturing of oncology plant for injectables and solid oral dosage worth rupees 160 to 165 crore. Company is targeting backward integration with its own APIs for 70% of all filing in US by 2024. The APIs include US injectable APIs, OSD APIs and oncology APIs. Company is growing the Latin America business. Caplin Point has also commenced its export to Mexico supplying injectables. Caplin's e-commerce platform Quitin X is growing rapidly, serving 100 plus unique customers with 440 plus SKUs. Caplin has now entered into the US market and going forward, US market would be the primary growth driver for company's growth. Caplin plans to enter more regulated markets such as Canada, Mexico and Australia in the near to mid-term horizon as well as expand its product portfolio. Overall, on future growth, I would rate it 10 on 10. If you look at the financials of company, its revenue has grown from 81 crore in June 2011 to 1061 crore by March 21 at an exceptional CAGR of 30%. Look at the consistent growth in revenue year on year. Its profits have grown from 6 crore in June 2011 to rupees 242 crore by March 21 at an exceptional CAGR of 46%. Look at the consistent growth in profits year on year. Hence, on growth ratio, I would rate it 10 on 10. Its operating margin has been very good. Currently, it is 31% in March 21. Now, if you look at the ROE and ROCE, both ROE and ROCE are on the higher side, which is well above 20%. The recent fall in ROE and ROCE is mainly due to heavy investment that would pay back in the future. On profitability ratio, I would rate it 10 on 10. If you look at the debt to equity, company is almost debt free. Hence, on debt to equity ratio, I would rate it 10 on 10. Its reserves have grown from 14 crore to rupees 1171 crore. And its cash flow stood at 195 crore at March 21. Promoters hold 69% shareholding in the company. FII have reduced the shareholding from 6.9% to 0.68%. However, DII have increased the shareholding from 0.02 to 1.28%. In spite of 130 times jump in share price in 10 years, Caplin Point is trading at rupees 589 at a P ratio of just 18. For a growth company like Caplin, the valuation looks highly undervalued. This makes Caplin Point a very attractive investment opportunity. Overall, Caplin Point is a pharma company with business in Latin America and other parts of the world. It has a diverse product portfolio and experienced management. Company is growing quickly and has already made a lot of capex for the next phase of growth. The financials look solid with high growth and high profitability. And currently, it is trading at a PE of 18, which makes it an undervalued stock. So what is your opinion about this stock? Have you invested in Caplin Point? Let me know in the comments. And course details are in the description box. I will see you with another video. Till then, take care.